Private debt and direct lending present distinct avenues for wealth creation, offering the potential for higher yields compared to traditional investments. This alternative financing often involves lending to companies that are unable to access conventional bank funding, thus catering to a niche market with specific financial needs. In parallel, investing in private equity provides affluent individuals with the opportunity to gain ownership stakes in private firms. However, this asset class is characterized by high entry barriers, including substantial investment thresholds that may limit participation to those with significant financial resources. The objective of private equity investments is to enhance the value of acquired businesses prior to divestiture or the initiation of an initial public offering, IPO. This investment strategy holds the potential for substantial returns, thereby appealing to those seeking meaningful financial growth. Intellectual property emerges as a pivotal asset class for affluent individuals who leverage it to augment their financial portfolios through revenue-generating licenses or royalties. This strategy is particularly compelling when contrasted with tangible assets, which often incur higher ongoing maintenance costs and liabilities. An exemplary case of effective intellectual property management is George Lucas's ownership of merchandising rights associated with the Star Wars franchise. This strategic control over intellectual property has yielded significant wealth through enduring revenue streams generated from licensed products, underscoring the financial advantages of such assets. Entrepreneurship remains a widely recognized avenue for financial growth, especially through the creation of businesses that can generate passive income. Successfully establishing a business can lay a strong foundation for long-term wealth accumulation, provided that the venture is strategically managed. In this context, it is vital to create income-generating systems that function independently from the owners. Such systems not only enhance business sustainability, but also facilitate consistent cash flow without the necessity for ongoing direct involvement. Moreover, software as a service, SaaS, businesses exemplify a model capable of generating stable subscription revenues with relatively low ongoing expenses. As the customer base expands, this model significantly fortifies the financial position of the business owner. Investments in timberland and farmland are increasingly capturing the interest of affluent individuals. These investments not only provide immediate financial returns, but also boast long-term growth potential, all while exhibiting less volatility compared to fluctuations in financial markets. Specifically, timberland investments enable investors to generate income through selective logging, while simultaneously benefiting from the appreciation of timber stock and land values. This dual revenue stream effectively enhances overall investment returns and diversifies investment portfolios. Structured financial products cater specifically to experienced investors, merging traditional securities with derivatives to formulate distinct risk-return profiles. Such instruments empower affluent investors to tailor their portfolios to optimize tax efficiency and mitigate downside risks. Finally, carried interest acts as a performance fee for fund managers operating within private equity. It represents a substantial portion of profits, and this method of compensation can facilitate considerable wealth generation for successful fund managers, further illustrating the lucrative nature of private equity investments.